Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario that Julius asked about during the live stream earlier today, where we have a wave 1 or A, 2 or B, and then a wave 3 or a wave C to the downside. Inside wave 1 or A, we then have a contracting leading diagonal where all of the waves are three-wave structures. What is important here is that this wave 5 is shorter than wave 3, and that is the case because wave 5 did not touch the 1-to-1 trend-based extension taken from the high to the low 3 to the high of wave 4. What you can see, however, is that wave 3 is a little bit longer than wave 1, as the wick over here just touched the 1-to-1 trend-based extension taken from the high to the low of 1 to the high of wave 2. This, however, is not an invalidation in a contracting diagonal based on the newer rules of Elliott Wave International. After wave A or 1, we are then looking for a three-wave corrective structure to the upside in a wave 2 or a wave B. The common target area for your wave B is between the 382 and the 886 Fibonacci, taken from the high to the low of this leading diagonal of wave 1 or A. This gives you a target between 63.1k and 71.9k. The common target area for your wave 2 is the red box here between the 05 and the 786 is 65.1k and 70.1k. The 382 for a wave 2 is less common, and the 886 for a wave 2 is very rare. You can also see the vertical lines on the chart, the 382 and the 1-to-1 here, and these are taken with a Fib time tool from the high to the low of this leading diagonal, comparing wave 1 or A with 2 or B, and it is by far preferred to end wave 2 or B at least after the 382 Fib time. It is very rare that structures finish before the 382 Fib time, and the 382 is sitting on the 19th of May 2024. The invalidation for this scenario would be for price to take out the all-time high. On the 1 hour time frame, this is then what we're looking for: an A or 1, 2 or B, and then a wave C or a wave 3 towards the upside. The common target area for your wave B once again is between the 382 and the 886 Fibonacci, taken from the low to the high of this wave A, giving you a target area between 62.1k and 57.5k. Common target area for your wave 2 is between the 05 and the 786, taken from the low to the high 61k to 58.4k, and the 382, uncommon for a wave 2, and the 886 is rare for a wave 2. Now what you can see is that price over here made the current low after the 0.382 Fib time, and that is also what we like to see. However, this wave 2 or potentially wave B can extend much longer in time, because only the 4 or the 5 Fib time really reduces probabilities for a wave 2 or a potential wave B. So at the moment I got the 382 till the 2 on my chart, but it can even extend longer. When we look at the support areas for price, then we have almost touched the daily naked point of control. We actually missed it by a few dollars earlier today, 61,750 on my chart. We have the top of the gap here as well at 61.3k, and then we have this blue box in confluence with the golden pocket sitting between 60k and 59.5k. The 786 is finally in confluence with the daily here at 58.3k. Inside is wave 2 or B to the downside. We're looking for three-wave corrective structures, and we here have a potential A, B, C to the downside, 5-wave A, 3-wave B, and then a 1, 2, 3, 4 and a 5-wave C. Common target area for your wave C is between the 1 and the 1.236 trend-based Fib extension, taken from the high to the low of A to the high of wave B. The current low is made over here on top of the 1-to-1, which is a common target for a wave 1. However, if we really want to change some market structure and move towards the upside for a bullish continuation potentially, then we need to see an impulsive structure in the wave 1, 2, 3, 4, 5. And what happened here is that price touched the 886, taken from the low to the high, reducing the probabilities that this low here is a wave 2, as the 886 is rare for a wave 2 but common for a wave B or a wave X, which increases the probabilities this move to the upside is a wave C or Y, which therefore increases the probabilities to sooner or later take the lows over here. If price takes these lows, it might end a potential wave C and bounce towards the upside, and of course the most bullish scenario is then moving towards the upside for new highs. price. But we also have to keep in mind that on the 1 hour time frame, we've only hit the red area here, the 382 zone, and not yet the common target area for a wave 2. And if we do want to see price moving to the downside further, there is the potential for a WXY scenario here, where we then have a zigzag in a wave W, looking for a 3-wave corrective structure to the upside in a wave X, and then a continuation to the downside in a wave Y. Now this scenario was posted by Eclipse in Discord, where for your wave X you are looking for a target, or at least a high, between the 382 and the 886 Fibonacci, taken from the high to the current low that we have, giving you a target area between 63.2k and 65.1k. Inside this area, we have two main areas of resistance. First of all, the blue box here, 63.4k to 63.8k. And then we have this big support resistance area here. As you can see, it rejected multiple times the past couple of days. And that resistance is sitting between 64.4k and 64.6k. After wave X, we are then looking for a continuation to the downside in wave Y and look for proof of support at lower levels. If we look at the CVD divergences, then we do have bullish CVD divergences, higher low in price, lower low on the CVD. However, what I would like to see is also some local strength and local support, which at the moment is not yet the case. So if we then look at the probabilities of the different scenarios, then on the daily time frame, currently the probabilities are simply neutral. We keep an eye on the local price section, which is what is happening over here, because in all cases at the moment, the probabilities are higher to still take the 65k high over here, and depending on a move towards the upside, we can look for a potential wave 3 and continuation to all-time highs, or a potential wave B or 2 and then move back towards the lows to take the lows here at 56k. Probabilities for an ABC in that case are higher than a bigger impulsive structure to the downside. On the 1 hour time frame, this time frame over here, the probabilities are higher for the bullish scenario, where we are looking for price to at least take the 65k high, and on the 15-minute time frame, the probabilities here very locally are higher to still take this low sooner or later. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.